down 58.6% in 2022. Is Blink charging stock a buy for 2023? I'm going to answer that question looking at several important metrics in this video, so let's get right into it. The first thing I'm going to look at is revenue growth for this charging company, and looking at the most recent quarter's revenue growth of a whopping 170%. That was down from the explosive 600%. Nevertheless, this company is growing very, very quickly, and the recent legislation passed in the US that's going to provide billions of dollars in stimulus to build out this charging infrastructure is going to be beneficial for Blink Charging and its rivals also. But its revenue growth is going to be fast, and that's something that investors need not be so concerned about. The more important concern is effectiveness, in efficiency in building out this network. Can they do it with minimal losses up front so that they could get to the point where after that infrastructure is built out, they can get to that recurring revenue stream that's going to be high margin and that's going to drive in profits and cash flow. But it's in this build out phase that's risky, and the execution is going to be critical. So let's look at what I was just talking about here. Profitability and operating income is just getting worse, falling from a loss of about 8 million to a loss of about 24.5 million to begin with. And of course, this is a fast growing, hyper growth stock. You expect to see losses on the bottom line when a company is growing like this. However, what I would like to see is some early evidence of economies in scale here. I want to see some leveraging of the fixed cost. I want to see, as the revenue is growing, these losses on the bottom line may be flattening out or maybe decreasing as they're growing, but we're not seeing that just yet, and that's a little bit concerning. Of course, Blink made a recent acquisition of SemaConnect, and that acquisition promises to perhaps decrease manufacturing costs and help with margins and the build out. That remains to be seen, but that's the hope with this acquisition. So that's something that investors can look forward to, seeing that integrated and bringing down the costs. But as with the losses on the bottom line, you're seeing major losses in cash flow from operations, down 26.8 million in the most recent quarter. That as well is on its way down as revenue is growing. So the more sales they make, the more they lose on the bottom line. Not very good news for investors when you have this kind of business model that is just growing so quickly. It's burning through a lot of cash, and you're just looking at some date in the future where, oh, if we get to this point, then we're going to generate these kinds of profits, and electric vehicles are going to be everywhere, so our revenue is going to explode. And all that might be true, but you may never get to that point because of some risk or another that comes to fruition, some execution flaw, some competition increase, or something that may prevent you from reaching that point is a major risk for investors. So with 26.8 million of losses in cash flow from operations, it's important to look at how much cash the company has on hand. And as of its most recent quarter, it only had 57 million in cash on hand. And as we saw earlier, it lost 28 million in its most recent quarter. So it only has about 2 quarters of cash flow left if it continues at this pace of losses. So it's going to need to do something to raise some more cash on its balance sheet to continue its build out. And with interest rates going as high as they have been and the cost of capital increasing, this isn't exactly the best environment you want to be in for needing to raise capital. So again, this is one of the risks I mentioned earlier with reaching that level where you're bringing in so much profits and cash flow at a certain scale. You might not get to that point. You might run out of cash and find it hard to raise additional cash. So let's look at its valuation. Blink is trading at a price to sales of 11.56, near the lowest it has been going back to July of 2020 and earlier in 2020, before all the hype in electric vehicle and supporting EV charging and all of those all of those types of stocks got a big infusion of hype and investor interest in 2020 and 2021. That's kind of came back down to reality. Now it's trading at where it was before the boost. And still, even at this price, I wouldn't say the stock is cheap, especially considering the risks in terms of liquidity and all the cash outflows. So to answer the question, is the stock a buy for 2023? I'm going to say no, it's not a buy for 2023. All right, that's all I've got for this video. Thanks for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.